afternoon, wherever you are. Good afternoon, wherever you are in the world. Maybe some of you are waking up, some of you are going to sleep. We're still working, and we want to welcome you to a very exciting afternoon. It's been a great week. I've just come out of a thing where we're talking about ethics and then creating excitement in the workplace. So it's great. My week, Dr. Charles, is ending well. I would like, ladies and gentlemen, to introduce you to our speaker for this afternoon. We are on I'm welcoming you to the HR Insight series that has been running since January this year. I remember very clearly the very first session that we had. Our two organizations, in fact, it's three organizations that are involved in this, and I'm grateful to Yolanda Asumu up there at HiPO at the HR Forum, Africa HR Forum, make a great job that they're doing. So it's the Africa HR Forum, is the Institute of People Management. My name is Dr. Jerry Gule, and I'm from the Institute of People Management in South Africa, driving the progression and the development of the HR profession. And it is also the African Human Resources Confederation, which brings together, hopes to bring together all the 54 countries on the continent to really standardize the practice of our profession, to bring respect with all the country associations to our profession, which is so critical because people are key in what we do. So I am very excited that today we're going to talk about this subject under the leadership of Dr. Charles Cotter, Performance Management System, Torpedoing, because of the phases in which you are today, new ways of productivity and engagement in the workplace. Dr. Charles Cotter is a well-known facilitator. Just to read maybe one or two things, his CV would take the whole day for me to go through. We don't want to do that. But Charles is an independent global blended learning practitioner and learning and development strategist, specializing in management training, and he has over 20 years of industry experience in global talent development. This is not a talent diminisher. This is a talent builder that we are under today. He has a vast array, he just operates across a number of disciplines and functions. One thing I remember, Charles, is at some point, LinkedIn actually, in terms of your contribution to presentation, you were once rated the most prolific contributor to LinkedIn, and you can find his presentations if you so wish on the internet. He has been doing this kind of training in over 159 companies in multiple industries in both the public and the private sector in 17 different countries. And of course, today, I'm assuming we're in over 100 countries. I would hope people listening from around the world. So Charles, wine your hands, my brother. I hand over to you.
Thanks for the lovely introduction, Dr. Jerry, and thanks to Yolanda and the team from HiPO and also the African HR Forum. Thanks for this learning platform and the opportunity. Much appreciated, and also for all the behind-the-scenes work and arrangements, and also Dr. Jerry representing the IPM in South Africa. I think as a proud South African, I think it's good to have you in my corner, Dr. Jerry. All right, thank you for the introduction. So I'm also going to assume that also when you registered for the webinar, that you had an opportunity to scan through and also just to browse through the learning agenda for this afternoon. Dr. Jerry is very strict as the chairperson of the forum. He's given me 45 minutes presentation talk time, and also then we budgeted 15 minutes for a Q&A session. That would be around about 4:45 South African time. And then, of course, for the Nigerian delegation, the Institute of HR Management, from their professional perspective, we're also going to stay online for an additional 30 minutes and deal with a number of questions. So I'm not going to dwell too much, Dr. Jerry, with the program. I think it's very clear. You would have seen that with the registration landing page. And then also, you'll see that there are generally three main themes that I'd like to focus on during our presentation. I've got a lot to get through, and I've only got 45 minutes, as I've mentioned. So if you could just bear with me, our presentation cadence is going to be very high. I'm going to move through the information as quickly as possible and allow as much time at the end of the presentation for questions that we can address. So like I said, three main themes that will be covered this afternoon. The first theme, of course, is the primary aspect, and that's, of course, performance management. So very important, we need to look at a number of questions related to performance management. You'll see on the screen right now, I have 6 questions that I've distilled the presentation to, and each of the 3 themes have 2 dedicated questions. So the first question looks at the 5 building blocks of a high-performance organization. I want us to unpack those building blocks, and then I want you to critically review and evaluate whether your organization is indeed a HiPO, and what are the strategies from an HR perspective that we can implement to drive this high-performance organizational culture. I'm also going to ask you to do a diagnosis of your current organizational performance management system. As Dr. Jerry said, the theme of the presentation this afternoon is, are performance management systems still relevant? Are they still fit for purpose? Are they still a strategic driver of business performance? And also, do they enable the future proofing of both the operating but also the business models? And I've created a SurveyMonkey link. I'll post that in the chat box section. And of course, in the spirit of, if you can multitask, we can generate real-time research intelligence. And of course, at the end of the presentation, I'll gladly share that research intelligence with you. The second theme this afternoon, and that's probably the secondary topic, and that is workforce productivity. So I want us to look at the HR metrics that we can include as key performance indicators in our HR scorecards. What are those in the 3 categories: efficiency, effectiveness, but also strategic impact? And I'd also like us to look at the productivity improvement strategies that we can employ, but those that are initiated by human resources management. And I want us to look at the 5 pivotal points of what I call the architecture of workforce productivity. And that's, of course, looking at organizational structures, looking at your processes, looking at your systems over and above your performance management system, also looking at the organizational culture, and also want us to look at how we can optimize the resources that are assigned to HR, because I think you'll agree with me, the strategic ambition is to transform HR from being a cost center to HR becoming a profit center. And then, of course, the almost the tertiary theme, the third theme that I want us to look at this afternoon is, of course, employee engagement. And there I want us to look at the 2 questions, the best practice strategies, but also to look at, again, a diagnostic activity. Again, I'll post the link in terms of the SurveyMonkey, and of course, you can generate the real-time survey intelligence from that. So broadly speaking, those are the 3 themes that I'm going to focus on. And like I said, I've distilled it to the 6 questions that we will address during the presentation, but also as part of the Q&A session after the presentation. All right, so just to give you a bit of context, the one thing that Dr. Jerry did mention with the introduction was also at some point in my career, I was full-time employed, training manager, working in the 8 until 4 thing, and all the stability and income security that comes with full-time employment. But a very important milestone in my career was the 31st of July 2004, because that's when I resigned. And from the 1st of August 2004, I started repositioning myself as an independent training contractor. So that's 17 years down the line. And one of my earlier quotes, you'll see the date there, 2005. So this dates back to 2005. And I'd like to say with a lot of pride that it's certainly aged and matured well. And I'm going to read the quote to you. The quote reads as follows: leaders should not only administer and manage change, but should pioneer, pilot, and drive change towards barrier-busting heights of performance improvement. So fast forward 16, 17 years, and I've modified that quote by what I suggest when we talk about this performance excellence, this performance improvement, we need in HR to go beyond imitation. I think one of the buzz terms that we kind of use in the HR professional community is best practice. And I think even I'm culpable of that, and I'll probably be using that term quite frequently throughout the afternoon session. But best practice, you'll agree with me, is nothing more than imitation. So the graduated steps of future-focused performance excellence are, number one, we've got to transition from best practice, which is very global and universal, number two, best fit. In other words, we have to make it organization specific. We have to tailor make it. We have to customize it. We cannot just carbon copy or replicate best practice and automatically assume that in our HR reality that is going to be an automatic guarantee of success. But beyond, of course, best fit is leapfrogging to next practice. In other words, we have to future-proof or create this business continuity. So what I'm suggesting is we've got to transition from best practice to best fit to ultimately next practice. And that's ultimately then leapfrogging from imitation to internalization to the highest order, in my opinion, and that's, of course, innovation. And you'll agree with me that the currency that we trade in as HR professionals, I think the two most important sources, the currency that we trade in, number one is innovation. And innovation, you'll see, is the currency of modern business management and the most expedient accelerator of organizational transformation. The second currency that I believe we trade in as HR professionals, and I want us to talk about this a little bit later on this afternoon, that's of course business intelligence. So what we need to do is we need to take our performance intelligence, convert that into HR intelligence, and HR intelligence then in turn has to be converted into business intelligence. When we trade in business intelligence, we are then able to enable and equip and empower the business decision makers to make smarter operational, but also strategic business decisions. So when I talk about this organizational transformation, what I'm referring to is what we call a high-performing organizational culture, often referred to as a HiPO, and I'm sure you heard of it. And I think we need to acknowledge that Andre de Waal is widely regarded as a global thought leader when it comes to the HiPO organizational cultures. And I just want to give you his definition of this HiPO. And it's where an organization achieves financial, but also non-financial results that are exceedingly better than those of its peer group. In other words, its competitors within its industry over a time period of 5 years or more by focusing in a disciplined way on which really matters to the organization. So when you talk about what really matters to the organization, I think you'll agree with me, we're talking about focusing on your core business. And I was reminded of a study, and you might be familiar with it, dating back to the 1970s, the number one management consultant today, Tom Peters, when he was making a name for himself, he worked for consultancy McKinsey, and he partnered with one of his colleagues, Waterman, Peters and Waterman, and in the early 1970s, they generated a study called In Search of Excellence. And in Search of Excellence, they were able to identify the top performing companies and, of course, the criteria which defined that performance excellence. And when we talk about focusing on your core business, they refer to that term as sticking to your knitting. And I think a lot of organizations, they scale their business up, they diversify, and they lose their focus. And of course, this detracts from their business continuity. So if you have a look at some of the key words on the screen right now, which then define a HiPO, for example, clarity, coordination, and the employees in that organization not only understand what the goals are, but they also understand the why, the purpose statement, and of course, cascaded down to the strategic, operational, and ultimately tactical goals of the organization. And they do understand their role. So we often refer to this as task significance. So they feel that they're making a meaningful and valuable contribution, but also task identity, because they're then able to see how their work contributes to the achievement of the goals and objectives within their specific business unit, and how that escalates up to the achievement of organizational goals, both operationally, but also strategically. So what I would like you to do at this point, just to make the session a little bit more interactive, I'd like you to take out your notepad and pen, and I want you on a 10-point rating scale. So 1 is poor, 5 is average, all the way through to a 10, which is excellent. The 5 strands of success. In other words, these are often referred to as the building blocks of creating this high-performing organizational culture. I'm going to run through them very quickly, and you can give me an idea as to, at the end of the presentation, as to what your score is, and of course, whether you believe that you are indeed currently representing a high-performing organization. So the first building block or strand of success is the quality of management. So the competency levels of management, but not just your senior and executive management. You've got to look at the different levels, your middle management, your junior, and also your team leaders, and also your supervisors. So the entire management cadre, how would you rate them on a 10-point scale, with 10 being excellent? The second criteria that we need to consider for a HiPO is, of course, continuous improvement and renewal. So these are the organizations that are constantly re-engineering, reinventing, redesigning. They are on the cutting edge of the latest development. And this is why we're saying these are the organizations that use the currency of innovation, but they also use the currency of business intelligence to make smarter strategic business decisions. So is your organization continuously improving? That Japanese philosophy of Kaizen, where Kai means change, Zen means good. Are we continually, even if it's just single digit, incremental improvement, but every single year, as a business, we seem to be performing consistently better year in and year out? And of course, we know what happened with COVID-19. Many of the organizational business models were almost redundant because it was a totally new way of doing business. And a lot of organizations went out of business because they didn't have that ability to redesign or re-engineer. So critically evaluate your organization, again, using a 10-point scale. The third criteria that you need to look at is, are we as a business, are we future focused? Do we have a long-term orientation, or do we tend to fixate on the short to the medium term? So I think just give yourself a score again on a 10-point scale. Just like the importance of the quality of management, so we also need to say that the quality of employees is equally important. So when we talk about employees, we're talking about non-managers, people that don't have managerial or supervisory responsibilities. Would you, again, if you look at the competency levels, the knowledge levels, the skills levels, the value system, compliance with the organizational value system, those behavioral competencies that are vital to perform their day-to-day responsibilities, how would you rate the quality of employees, your general workforce? And then, of course, the fifth criteria, the strand of success or the building block that we need to look at is, of course, openness and action orientation. Now, we know we often use this term VUCA. We know that the business environment is volatile, it's uncertain, it's complex, it's ambiguous. We know that we're currently operating in a business unusual environment, and we know that your business model is under tremendous pressure, especially in the market and the macro environment. So how agile, how responsive are you to those forces? And of course, do you then take action? Do you take proaction or do you take reaction? So what kind of response does your organization engage in? So collectively, these 5 building blocks constitute whether we are indeed a high-performance organizational culture. And once you've calculated your score, tally it up, it'll give you a score out of 100. At the end of the presentation this afternoon, I want us to critically review those scores, and then I can give you the threshold, the global accepted threshold, in terms of what the score would be for you to then qualify or regard yourself as a high-performance organizational culture. All right, so that is then the first question that I want us to look at, and that is more from a cultural perspective, organizational cultural perspective. I want us to start looking at the second key question with regards to performance management, and that is, of course, to look at your current performance management system. So again, to make the session as interactive as possible, what I would like you to do, and I'm just going to paste the link in the chat box section, just bear with me. And if you are a true blue HR professional who can multitask, in other words, can still continue to listen attentively, but also then at the same time complete this 2 to 3 minute online survey just to generate this diagnostic survey intelligence, you're welcome to do that. I'm just going to paste it in the chat box section, and you can just click on the link. And of course, I'm going to put that in the general section. Can everybody see the link to the diagnostic survey? So that is then, of course, the diagnosis of your current performance management system. And again, you're welcome just to jot down your score and, of course, do the gap analysis where perhaps, for example, said that you disagree or even strongly disagree. So my research has shown, and I'm just going to put it up on the screen right now while you're busy completing the survey, is my research has shown that there are 10 best practice criteria that define an excellent performance management system. And I've got it up on the screen right now, and there's no time to run through each of them. You'll find each of these 10 best practice criteria then reflected in the online diagnostic survey. So I'm going to leave that with you. And if you don't get an opportunity to complete it right now during the webinar presentation, via Kelly, I will share the presentation. So please don't panic. You will get a copy of the presentation, and all of these links will be made available to you along with post-webinar. I'll also collate all of the research intelligence, and I'll put it in a report, and I'll share that with everybody so that you can see where you are. Right now, I'd like to, for benchmarking purposes, in the spirit of continuous improvement, I would like to share some of the research from a study that I completed right across the African continent, just to give you the context and the scope of the research. So it was across 13 African countries in Southern, East, and also West Africa. Also, as part of the post-webinar package, the toolkit of learning resources, I will then also include that report so you can see the detailed analysis. But like I said, 13 countries, 13, funny enough, coincidentally, 13 HR and learning and development value chain functions. That was part of the scope of the study. And then also a total of 3,319 respondents. So it was quite a comprehensive study, and I'll gladly share that with you. But these were, from a performance management systems perspective, these were the best practice criteria. And then, like I said, for benchmarking purposes, you will find this in the detailed research report. And you're welcome to compare your score with your peers in the African HR professional community. But from my study, across those 13 African countries, 3,319 respondents, I found that the average score for the organizational performance management systems is currently 63.7%. And also, I just want to alert you to the fact that from my study, there were 3 gaps. You'll see question 5, which only scored an average of 56%. So question 5 then deals with the simplicity, the understandability, but also the user friendliness of your performance management system. It seems like one of the constraints to an effective performance management system is we have very sophisticated systems that the end user, line managers, for example, the people, the performance and the talent managers, they don't seem to understand how to use that performance management system optimally. And therefore, this, from my study, was found as the widest gap. I also found question 10 and question 8. And again, you can have a look at the average scores there, 57, but also 58%. So question 10 deals with a multi-dimensional perspective. So we often use a more modern term, crowdsourced performance intelligence. In other words, an old school 360-degree performance evaluation, a multi-rater system. We don't seem to be excelling with that, and we don't seem to be generating this performance intelligence and analytics, which we can then effectively leverage as for performance development, but also performance improvement tools. And I think this is a huge concern because this is fit for purpose. This is primarily, I think you'll agree with me, primarily, this is why we design performance management systems, to help us to identify those performance gaps. And of course, if the system doesn't generate that performance intelligence, like I said earlier on, it's very difficult then for us in the HR professional community to convert that performance intelligence into HR intelligence and ultimately convert that into the currency that we need to trade in. And that's, of course, business intelligence. And also question 8, you will see, was the third widest gap. And that is then, of course, the correcting of poor performance levels, but also the underachievement. So I think you're familiar with the performance matrix, and you'll see that there are 4 performance quadrants. And in particular, what's concerning are the poor performance and the underachievers. And it seems to me from my study that this is a huge concern. So just to put things into context, what I've also developed as part of the study was 4 levels of strategic maturity. Now, there's 3 surveys that I want us to complete. This is the first one this afternoon. the performance management system employee engagement, which measures your employee engagement index, but also I want us to look at the roles and the expectations of the strategic HR business partnering role that business management teams expect us to fulfill and even exceed. So the scores that you achieve, this is a yardstick that can be used to determine the level of maturity. So for example, if you've just completed the performance management system survey and you scored from 0 to 40, if you scored in that range, you would then be at a level 1 of maturity. In other words, you could argue that your performance management system is very traditional. It's probably paper-based, it's probably a manual system, it's probably measuring the traditional key performance areas and key performance indicators. If you score in the range of 41 to 64%, that would then suggest that you are at level 2 of maturity, which is then transactional. So your performance management system would be transactional. If you score 65 to 79%, you would then say your performance management system is at level 3, it's then transformational. And if you then score, the golden number is of course 80%. If you score 80% and above, this would then suggest that your performance management system is indeed a strategic lever, a driver of business performance. So again, if I can just remind you, if you go back to the general findings from my study, so just under 64% would then suggest to me that currently across the African continent from my studies that the organizational performance management systems are operating at a no better than a level 2. It's on the cusp of level 3 because it's just below 65%. But at this stage, it's very clear. So Dr. Jerry, the title of the presentation, Torpedoing of Performance Management Systems. From my experience in my research, it's very clear that the performance management systems in Africa are not working. They are operating in a level 2 of maturity. They tend to be transactional, and they're certainly not transformational. They're not influencing organizational culture, and they're also not then an enabler or driver of strategic business performance. So I think for me, it's a very clear gap. It's something that we need to work on. And I think each organization will be different. That's why I would like you to complete the survey, and then you can identify and analyze the specific gaps that you need to improve on as we move forward. So I was invited to, this was pre-COVID-19 when we could still travel. I was invited to America to speak at one of the HR conferences. This was towards the end of 2016. In fact, 2017, I'm getting my timeline all wrong. I was asked to look at some of the trends that define performance management. I'm going to run through them very quickly. Because I think these, although it dates back to 2017, I think these are still relevant. So what has to change in terms of our organizational performance management systems in particular, but also the methodology, the tools that we use, etc. Number one, we need to re-engineer the annual review cycle. Those annual performance reviews, they are just not working. And there's a very good video, and I'm going to leave the clip with you, and I'm going to really encourage you. It's a 7-minute video clip. I'm really going to encourage you to watch this video clip of how Deloitte, the management consultancy, how they reinvented their performance management system. This dates back again to 2016, and they did the global rollout in the first quarter of 2017, and the feedback is quite remarkable. And one of the major changes that they did make was the dismantling, the abolition of the annual performance review system and that numerical performance rating system. They replaced that with a strengths-based leadership coaching culture. And that for me is some advice as a management consultant when I work with different organizations right across the African continent. That is my one bit of advice that I would like to share. Is make sure that your numerical system is accurate, it's objective, and it does then objectively measure the true value of performance. So I want to leave this with you, but this is essentially some of the fundamental changes, the automation, continuous improvement, utilizing digital performance management systems, Then transitioning from the performance, those very traditional performance discussions, which are very one-directional, where the line manager tends to be a dictator and very prescriptive. We need to shift to performance dialogue. I think it's very important. We've already highlighted from the diagnostic survey that we need to start moving towards crowdsourced performance intelligence, which can then be converted into business intelligence. The personalization of the employee experience, very important. Performance differentiation. And I know you might argue it's a very extreme example, but I think Google have really amplified this. We know that in terms of their brand equity, Google are light years ahead of anybody else. And they, for example, are not afraid to pay 2 software engineers who are on the same organizational level, but the one is certainly performing way better than the other one. They are not afraid to pay as much as 500% more to that software engineer that is outperforming his peer or his contemporary. So 50 times the salary. I know it's a radical example, but it just amplifies that performance differentiation. I think is one of the trends that we need to start shifting towards. And of course, like we said, we've got to start looking at performance improvement. And the one that's probably the most controversial, and I'm sure there's going to be a couple of questions that emanate from this later on this afternoon, is that what they call the decoupling of performance and compensation. Because we often find that right across the African continent, the performance bonuses tend to be the pot of gold at the end of the performance management rainbow. And we kind of fixate on that, and everything is directed towards who's going to qualify for those performance bonuses, those annual performance bonuses. And that is not fit for purpose. That is not why we design performance management systems. So the most progressive organizations, the best practice organizations have separated that, in fact, divorced the two. So they have a performance management system with the primary objective to identify performance gaps, look at performance development and improvement, and then they have a separate performance incentive and reward system, including non-financial incentives, in other words, employee recognition schemes, etc. So they separate the two. And this, I think, is something that as an organization, you might consider doing your due diligence, looking at your feasibility and seeing how you can separate the two. Because if there's one factor that I think has contaminated performance management systems right across the African continent, from my experience, the one area is that link between performance, the performance management system, and the performance bonuses and the financial rewards that people qualify for on an annual basis. I think it just complicates the performance equation. And of course, it just, like I said, it almost corrupts the system to a point where it no longer is fit for purpose. So I want to move on at this point. I'm moving through the presentation quite quickly, but there's still quite a lot of work that I'd like us to get through, and I am running out of time. And Dr. Jerry said he's going to give me this nonverbal cue when I need to start wrapping up. So yeah, I want to move over to the secondary discussion point this afternoon, and that is something which I think that HR needs to be far more heavily involved with, and that, of course, is workforce productivity. So when I was doing research for this presentation, I stumbled upon this quote. First time that I saw this quote, Paul J. Mayer, and I was quite impressed because I think it really captures workforce productivity. And I'd like to check whether you agree or disagree with it. And you're welcome to post a comment in the chat box section. So the quote reads as follows: productivity is never an accident. It's always the result of commitment to excellence, intelligent planning, and focused effort. And I think when you look at some of these key concepts, commitment to excellence, intelligent planning, focused effort, I think we're picking up a couple of common denominators here. So when we talk about this high performance organization and we're talking about workforce productivity, we're picking up common denominators. This word excellence seems to be a recurring theme. And of course, the word intelligence, and of course, it requires a focused effort. So I think it's very important that HR becomes a lot more instrumental in driving, initiating, but then also ultimately driving productivity improvement strategies. I think for me, it's very important that we review the 5 pivotal points of the performance management. I call it the performance management and also the productivity architecture. So when I talk about this architecture, I'm talking about organizational structures, I'm talking about your systems, I'm talking about your processes, I'm talking about your culture, your organizational culture, but also I'm talking about the utilization of the resources that have been assigned and allocated to human resources management. We know that in a lot of organizations, your personnel budget is sometimes as much as 70% of your operating budget. So we have to start developing metrics that can showcase and demonstrate the strategic value proposition of human resources management. And I want us to look at very shortly, I want us to look at some of those metrics that have to be included in our HR scorecard. So when I work with organizations, looking at these 5 pivotal points, looking at the workforce productivity architecture, what I do suggest is a very simple, I call it the LADIO, L-A-D-I-O. It's an acronym which is then helping organizations to identify what we need to do to transform to this high-performing organizational culture. For example, when I talk about the L, I'm talking about lean. When I talk about lean, I'm referring to your organizational structures. So what I'm suggesting is that you need to make sure that your organizational structures are lean. When I look at the A stands for agile. And I think it's probably the most overquoted word in business literature at the moment. But when we talk about agile, I'm referring to your organizational processes. So your processes must be agile. The D stands for digital. When I talk about digital, I'm referring to your systems, not just your performance management system, all of your HR information systems, right across the entire HR value chain. You have to go from manual to automated to digital. And regrettably, the next frontier of HR is intelligent human resources management. I call it the collaborative intelligence economy, where we're basically going to try to harmonize human intelligence, business intelligence, and of course, perceived as a threat right now is, of course, artificial intelligence. But it's very clear, and Dr. Jerry will remind us that when you look at all of the future of the workplace studies, it is suggested that by the year 2025, as much as 70% of the work of human resources management will be done not by human intelligence, it'll be done by artificial or business intelligence. Only 30% of the work of HR looking to the future. So the future fitness and the future proofing of the HR operating model is in severe jeopardy right now. So beyond digital, of course, is intelligent. And of course, when I talk about the I, I'm talking about innovation. I've already mentioned that. I'm not going to repeat that. When I talk about innovative, I'm referring to the organizational behavior. I'm talking about your organizational culture. We know that organizational culture is nothing more than the accumulation of organizational behavior and the organizational value system. Organizational behavior plus organizational values equals organizational culture. So that organizational culture, in my opinion, must be either intelligent, looking to the future, but currently it must be innovative, because we did agree that is the currency that we need to trade in. And of course, the O stands for, going back to LADIO, the O stands for optimization of the resources. And when I talk about optimization, I'm talking about the 4 E's. So we need to make sure in HR that we utilize those resources efficiently, effectively, economically, but also we need to use those resources ethically. So those are the 4 E's which collectively then constitute the LADIO approach, which then for me, I think is a very good framework that you could use in order to improve the productivity levels. And this has to be initiated by the human resources management professional team in all organizations. I want us to move over to the 4th question that deals with workforce productivity, and that is to look at your scorecard. So just bear with me. In the context of your HR scorecard, I'm positioning workforce productivity as a key performance area. I believe that collectively not more than 6 key performance areas in your HR scorecard. And in each of those 6 key performance areas, you need to drill down to identify the key performance indicators, or sometimes referred to as the metrics. And I think we all know that there are three categories of metrics that have to be reflected in our scorecard: efficiency metric, effectiveness metric, but also strategic impact metric. And you'll see in the next two slides, it becomes very clear that I absolutely love the 70-20-10% configuration, which is a derivative of the Pareto principle, the 80-20% principle. So when you talk about the HRM metrics, I just want to leave you with this quote: in order to optimize and promote decisional management decisions, in other words, operational, but also strategic decisions, the configuration of the HRM metrics dashboard should favor lead and not lag key performance indicators. If you study business management, day one, lecture one, they'll teach you the difference between lag and lead performance indicators. And the lead performance indicators are future focused. I think a lot of what we do in HR, a lot of the metrics and the reporting in particular, human capital reporting, fixates on the lag performance indicators that are historical, that are retrospective, that are backward looking. Sometimes that the lag time we're talking about is 6 to even 12 months. So when we pick up organizational issues, burning issues, sometimes it's 6 to 12 months behind the change curve. So we need to reconfigure, like I said, hindsight, insight, and foresight. Hindsight for me should be backward looking 10%. Insight, what's happening on your dashboard right now, 70%. And the foresight, the future looking, the forward looking, the lead performance indicators, I believe, should be weighted at 20%. So the cumulative HRM intelligence, as reflected in your HR scorecard, should be a manifestation of the historical events and patterns. In other words, when we look at the 4 categories of analytics, the first one is then descriptive, the current business priorities and the burning issues, that is diagnostics. So all of these surveys that we complete, those are examples of diagnostic analytics. Future business projections, in other words, predictive analytics, and the most sophisticated is then the recommended initiatives. And that, of course, is then prescriptive analytics. So what I'm suggesting is that we need to transform from fixating on descriptive and diagnostic analytics to concentrating more on predictive and also ultimately, best case scenario, prescriptive and predictive. I think those are the most important analytics that we need to focus on. So in structuring your HR scorecard, what I would then suggest, again, using key performance area workforce productivity, we said that there's strategic impact. We need to weight those metrics at 70%. And I've given you a few examples, typically what I feel should be incorporated into your scorecard. Well, for me, it's a choice of one of two. It's either human capital return on investment or human capital value add. And what I will do is I'll send you a document with all the formulas. So I'm not going to dwell on the formulas of how to calculate these metrics. I just want to alert you to the fact these are what I feel are the best practice metrics. I wouldn't use both. I would then look at the relevance of each one, and given your business and strategic plan, I think you can then determine which one is the most relevant. So those for me are one of the strategic impact metrics. When we look at effectiveness, which I believe should be weighted at 20%, when we talk about effectiveness, there's a number of options, and you might even be including these in your scorecard currently. Either the revenue per full-time employee, or sometimes referred to as the revenue factor, or profit. I wouldn't use both. Look at your business model and determine which one is more of a priority. Are you chasing revenue, or are you chasing profits or profitability? And then alternatively, another effectiveness metric that you could use is comparative benchmarking, either within your industry, so your productivity levels in your organization compared to your competitors within your industry, or if you want to compare it with nation or continental or even global averages, you could look at, well, in our industry, in the IT industry, where do we feature in terms of our peers? Where do we feature in terms of other industries? So looking at the national, continental, but also even the industry averages. And I think that will be a very useful yardstick to determine if we are indeed a productive organization or not. And then, of course, efficiency. And again, I've given you 3, in fact, more than 3, but I've given you 3 possible options. And again, I would include one of them in my scorecard, and that would then only be weighted at 10%, because I think I've made it clear I do favor the 70-20-10% configuration. So for example, you could look at labor cost revenue ratio. You could look at the number of, it's a quantitative measure, the number of HRM initiated productivity improvement measures. And I think what you could do is you could either, in terms of the time period, you could look at this on a quarterly basis or even annually. I think, again, you have discretion in that regard, or you could use some activity-based. Those of you that remember, I started out in HR in the late 1980s, and there were these, they call them work-study officers. And they would then use these metrics, for example, time to productivity. And I think you'll agree with me, the threshold there shouldn't be more than 6 months. Post-employment or post-promotion, but you could also look at time to perform. Again, 9 months would be the generally regarded acceptable threshold, or time to competency, and that's usually not more than 18 months, because we know competency is more of a challenge, because it's not just about performing. You've got to have the requisite knowledge, the skills, but also those behavioral competencies and the value system to perform your duties. So I want to leave this with you, and you can use in consultation with your key stakeholders and your HR team members, but I would suggest that you use one of these then in your HR scorecard. So I would like to move over to the next question. This is the 5th question, and Dr. Jerry's already giving me that stern look. Dr. Jerry, how much time do I have left?
I'm going to be Mother Christmas. You can, let me give you another 5. Another 5.
5
yes.
minutes. Okay. All right. So I want to spend 5 minutes. So I want to leave this with you. And again, what I'd like to do is just to make the session more interactive, I want to paste. This is the 2nd diagnostic survey. And this is based on, let me just make sure that everybody has it. This is based on focus group discussions that I had, and I think Dr. Jerry will even know some of them. Focus group discussions that I had with some of South Africa's best known business executives. There were a total of 30 of them, and I just asked them 2 questions. So I sat down with them, I had focus group discussions with them, and I asked them 2 questions. So I said, in terms of the strategic HR business partner, number 1, what roles do you expect them to play? And within each of those roles, what are your business management expectations? So I was able to then collate all of the information, and this again is the basis of the diagnostic survey. You're welcome again to complete it post-webinar, but I'm just going to run through it very quickly. These are the 10 roles, and you'll see in the questionnaire, in the survey that you will complete, you will then be able to extract the expectation. But this is what collectively, what the 10 business executives, or the 10 roles that these 30 business executives said to me. Number 1, they expect, in terms of their strategic HR business partner, expect us to be a catalytic driver of organizational change. Number 2, they expect us to be a proactive, business-minded thinker. Number 3, they expect it to be a collaborative business management consultant. Number 4, they expect us to be a purpose-directed coach, in particular of line management, who are the performance and talent managers. Number 5, they expect us to be delivery, value adding and results orientated in terms of our HR practices. They expect us to be a credible and accountable performance advisor. They expect us, number 7, to be a strategic facilitator and enabler. Number 8, they expect us to be an innovative solutions architect, troubleshooter, not a troublemaker. Number 9, which I think is concerning for me, across the African continent, they expect us to be a digital futurist, an analyst. So our digital literacy is very important. And if you had to hold me to gunpoint and say, of the 10, which one do I feel is the most significant, the most important? This is it, number 10, to be a future-focused organizational behavioral economist. And just to complement that, I have a quote. And the quote reads as follows: we have to transform from industrial psychologists to behavioral economists who trade in competitive, predictive, and prescriptive analytics and real-time and prescriptive analytics, business intelligence. And we need to also have an in-depth and rich insight into what I call the anatomy of management. So when I talk about the anatomy of business management, I'm talking about, number one, the mechanics. So we need to understand organizational structures, processes, systems, business operations, etc. Number two, we need to understand the dynamics. In other words, the culture, the values, emotions, attitudes, but also we need to understand the analytics. So your core business performance metrics, especially your productivity and especially your performance metrics, like I've highlighted, and how those shape, inform, influence key strategic and also operational decision-making. So I want to leave that with you, and I just want to conclude the presentation. Dr. Jerry, I think I've got 2 or 3 minutes left. To look at employee engagement. And I think we all become accustomed to the value of employee engagement. So I've left you with a definition of employee engagement. We know employee engagement, that heightened emotional connection that people experience, number one, towards their jobs, number two, towards the employer. And of course, I think the strategic ambition for HR should be to create a culture of brand ambassadors. You don't want employees, you don't want associates, you want a culture of brand ambassadors. And for me, the formula for brand ambassadors is very straightforward. We need to instill a sense of ownership and also instill a sense of belonging. So a sense of ownership plus a sense of belonging, for me, equals a culture of brand ambassadors. And we can then start capitalizing on some of the benefits. And we know that Gallup are widely regarded as a global research thought leaders when it comes to employee engagement. And in their seminal study in 2013, they highlighted that there are 9 key business performance indicators that are positively influenced because of high levels of employee engagement. This is almost sometimes argued, this is the holy grail of talent management. It's a wish list for any HR manager. Christmas has come early. Mother Christmas, Dr. Jerry's come early, because it's absenteeism, it's turnover, it's less shrinkage in the retail industry, in the mining industry, less occupational health and safety accidents. In manufacturing, quality is a very important indicator, so less defects. We all have a customer, so you can see 10% high levels of customer satisfaction, and productivity that we spoke about, 21% high levels of productivity. And of course, the deal breaker is profitability, which is increased as much as 22%. So again, I just want to paste the link. And again, we're probably running out of time, Dr. Jerry. So just give me another 2 minutes. I'm wrapping it up. So you probably won't be able to complete this during the webinar, but I'm going to leave the link with you. And again, this is the 3rd diagnostic survey. And this one is then to measure your employee engagement index. And I think along with those productivity metrics, I think under the key performance area of talent retention, I think the employee engagement index is a very important inclusion in your HR scorecard. Strategic impact, it should be weighted at 70% because of the instrumentality, the value of higher levels of engagement. So I want to leave this with you. Welcome to complete it. I will, like I said, send you the survey intelligence post-webinar, but you'll see when you complete the survey, it's very clear. Again, this is research-based. These are the 10 best practice criteria. If you follow the work of Gallup, you might be familiar. They have what they call Q12. So they have a 12-item questionnaire. So I looked at what all the experts have said, and I collated all of this, and I got it down to 10. These are, in my opinion, what defines the employee engagement index. And of course, you can measure the current degree of employee engagement by the compliance. Again, just to conclude, for benchmarking purposes, the average score across my study, across the African continent, was just under 61%. And you're welcome to jot this down, but I will send you the report. But the most efficient, the most dysfunctional criteria was question 2, question 3, and question 7. And you can look at how disappointing the average scores there, ranging from 46 to 48%. The one that's the widest gap, of course, there seems to be a lack of recognition and also care and interest as demonstrated by managers. So I want to start wrapping it up. And what I've left you with is what I've curated is what I regard as the best practice employee engagement strategies. And I've included 7 sources. The first source is the Chartered Institute of Personnel Development. So that's from a UK perspective. It would be remiss not to include Gallup. They are widely regarded as a global thought leaders. So I've given you, according to Gallup, what they regard as the best practice employee engagement strategies. Michael Armstrong, again, from a UK perspective, think you might be familiar with his work. He's widely regarded as a global thought leader with strategic HRM. And again, if you look at some of the keywords there, as we've discussed, performance management seems to be a reoccurring theme. Tiny Pulse, again, from a USA perspective, not far behind Gallup in terms of their research thought leadership. 2018 study, they suggested, again, recognition right at the top, and also the organizational culture. And the Harvard Business Review, from an academic perspective, again, they've got recognition for high performance as the #1 driver of employee engagement. And I think you'll agree Deloitte are widely regarded as the global thought leaders when it comes to human resources and talent management. And they've given us what they call an irresistible organizational model, which collectively means there are 5 factors: meaningful work, supportive management, positive working environment, growth opportunities, and trust in leadership. And then collectively, also similar to what I did with performance management, I want to leave you with a very short video clip. It's 3 minutes. It's only 3 minutes, but it's power-packed. It's the best 3-minute video clip, which captures employee engagement. If you're able to watch this, you'll find it on YouTube. Again, let me just paste the link in the chat box section. And that, of course, you'll see if you watch the video clip, it gives you 3 strategies. And in each of those strategies, they drill down and give you 3 additional secondary strategies, so a total of 9 strategies. So I've curated content where I've given you 7 schools of thought. These are the global thought leaders. And what I would then suggest is you review the experts' theories, and you collate all of this, and you develop for your specific organization, because remember, this is best practice. You've got to convert it to best fit. You create a code of best practice. I would say not more than 10 strategies. And that is then, from an HR perspective, those are the strategies that you should be driving, you should be implementing, you should be reporting, you should be measuring, you should be monitoring, you should be evaluating on those strategies, because that, I believe, is the key then to transforming to a strategic performance advisor. So the last thing from our side, Dr. Jerry, thank you for the opportunity, and thank you for your concession, giving me some additional time. I believe that the next 4 or 5 years are going to be very critical for the history of HR. The good news is that we are the architects of our future. I anticipate that by the year 2025, when we reflect, when we look back, it's either going to be an era of distinction, or worst case scenario, it's going to be an era of extinction. But like I said, the good news is we in the HR, in the African HR professional community, we will determine whether we are then serving an era of distinction or an era of extinction, where we will become part of the 70% of the people who are then replaced. Human intelligence is replaced by artificial or business intelligence. Thank you. I'm done. Thank you, Dr. Jerry, for allowing me to go a little bit over my time, but I've gone through my presentation. I'm ready to take questions.
You know, Charles, I always at the end of these sessions ask Yolanda, why are we doing this way? This is so short. We need 5 days to go through the stuff.
Absolutely.
Look at that. I think let's give the gentleman, let's give the good doctor a clap, ladies and gentlemen. This was a great presentation. Thank you, my bro. Thank you so much for that. Now we're checking the questions. We have a couple of questions. I'm not going to try and summarize, because there is nothing like that. We have come here, we have learned, we have picked up some nuggets. And I think for me as an HR professional, my appeal to us is actually this should give us excitement. That we wake up every day and we say, I'm going to do the best job I can as an HR officer because of what, you know, the potential, the possibilities that are out there. Sometimes I wish, Charles, I was like 17 years old, starting all over, but you know, I shouldn't regret that. Okay, let's take some questions. So we have a couple of minutes. We agreed that we're gonna go at least to quarter past the hour in terms of our questions. So I'm gonna shoot with the questions from the audience. I saw a very interesting question. The first question that I saw here had to do we have questions that are going to come from the floor or that's the room in Nigeria? So there are plenty of questions, I'm sure, that are going to come from there. But let's just start with this one. Charles, we have seen the questions on the Q&A. Doc?
Yes, Jerry.
Have you seen the question on the Q&A, or should you want me to read it?
I haven't had a chance to look at the comments. I've been so focused on my presentation.
Yeah. No problem. So the first question, I'll summarize it. Is it possible to shift, to change a culture of an organization? That was one of the first questions.
Okay. Yeah, I think it is possible. I'm going to try to keep my response as brief as possible. I think it is possible. We know that the senior and executive management team are the cultural carriers. So our role is in human resources management. So I think we need to win over the senior and executive managers. For me, that's not negotiable because they influence culture. And we've all heard that quote of Peter Drucker, that world famous quote about culture eating strategy for breakfast. So I think in HR, we kind of fixate. We're grappling with HR strategy right now and trying to reposition ourselves as a strategic HR business partner. We're losing sight of the fact that culture always trumps, culture always supersedes strategy. So I think it is possible to influence culture, but remember, the culture is hardwired into the organizational psyche and is almost embedded and handed down from one management generation to the next. So it's very difficult, I think, for HR to influence change, organizational cultural change, because, and I think informally you alluded to this, Dr. Jerry, I think our credibility in HR has been tainted over a number of generations. So at the boardroom level, so when you have the CEO and the CFO and the chief operating officer, even a chief information officer, when they look at the chief HR officer or the director of HR, when they look at us, and therefore when we talk, I think it's more challenging for HR to influence culture. But I think it is possible. It's going to take a very long time, but it does start with looking at the organizational behavior. It does start by looking at influencing the core value system of the organization, and also then just showcasing our performance value, our strategic value proposition of HR. This is what the business executive said to me, that they want HR to stop talking about performance improvement. They want us to start delivering. And we need it at boardroom level in particular. We need to be able to go toe to toe with these hard-nosed business executives. So when the CFO starts talking financial metrics, if we don't go toe to toe with them, we are not only out of sync with business, we're going to sink as well. So if we're out of sync, we are going to sink. So I think in a lot of companies right now, regrettably, HR is almost equivalent to the captain of the Titanic. And I just hope that we can salvage something. But I think in response to the question, it can be changed. We can become a high-performance organizational culture. There are 5 building blocks. We know what we need to focus on, and we just then need to show our value and our contribution in each of those 5 building blocks, start influencing organizational behavior. That's what Dr. Jerry and the other members, I think for me, it's very important that we are behavioral economists. If we don't know and understand human behavior and are able to influence people's attitudes, their mindsets, and the value system, then we're never going to influence the culture. And if we cannot positively influence the organizational culture, with all due respect, we can re-engage. We can have a similar webinar in 5 years' time, and the narrative would not change. We would still be talking about the same challenges. The fact that HR, my research and many other research studies have shown conclusively that HR right now, in terms of strategic maturity, is transactional. And that has to change. So I think for me, charity begins at home. We need to change from within. And then, of course, once we have mastered and we get to level 4 of strategic maturity, we start hitting 80% in our HR scorecards, then I think we can start challenging and influencing organizational culture. Right now, if we are transactional HR, I would say, unless you're Tom Cruise, it's mission impossible to influence culture, certainly in the short term.
Thank you, Charles. Next question. What can HR do when management executive or executives really approve the transformational ideas and trends that HR puts on the table. They don't appreciate the people development or the training that is provided. What can I do as an HR officer?
Well, the worst thing you can do is to sulk about it. The worst thing that you can do is complain about it. It's very clear in those focus group discussions with those 30 South African-based business executives. It's very clear to me that they just want HR to start delivering. So we've got to go back to our HR scorecard. We've got to go back to our performance dashboards and start setting targets in that regard and saying, well, what is the target in terms of the employee engagement index? Some of those other HR metrics that I mentioned in the presentation, when you look at workforce productivity, start looking at human capital return investment, human capital ROI. From a training perspective, from a learning and development perspective, we know that the number one metric there is training ROI. And we have to start showing, I won't mention companies' names, but I worked with a company recently and we did the number crunching for training ROI. And I won't even mention their training budget, but it was an astronomical training budget. And when we did this accurately, scientifically, objectively, we ended up with an ROI of minus 500%. So for every $1 or rand that was spent on training, this company was losing $50. It must be the worst investment in the world. This is why we're saying, Dr. Jerry and the members of the webinar, we have to convert HR from being a cost center that's consuming a large amount of financial resources, converting that into a profit center. If we cannot achieve that, Jerry, then I'm afraid to say, again, the same conversation in 5 years' time. We have to go from a culture of mediocrity to a culture of meritocracy. I started off my presentation by talking about performance excellence. We have to start subscribing to performance excellence. So we're not going to get the recognition. We're not going to get the acknowledgement. We're not going to get the respect from hard-nosed business managers until we pull up our socks, until we start demonstrating our strategic value proposition as objectively reflected in the HR scorecard. We got to something which was beyond the scope of my presentation, but one of the fundamental changes, Dr. Jerry, is we got to transform HR to an evidence-based human resources management philosophy. And I'll share the slides and the information with you. When I talk about evidence-based, I identified 7 fundamental changes. One of those changes is we've got to go in HR from being intuitive to more intelligent. We've got to go from intuition to intelligence. We cannot go to the boardroom and say, well, HR are doing a good job. We know that HR are doing a good job. And this is what your business management team will say, but that's why we pay you the big bucks in any case. We know you're doing a good job, but we got to now be able to demonstrate and to prove. You've got to go back to your HR scorecard. You say, sir, ma'am, look at the HR scorecard performance. HR in 2021 scored 62%. In the following year, we increased from 62, we hit 73%. In year 3, we achieved 80%. We've been able to maintain, remember Duvall's definition of a HiPO, 5 consecutive years. You have to hit and exceed your performance targets relative to your peers for a time period of 5 years or more. This is why HR is not getting the respect, the acknowledgement that they deserve, because in the eyes of business management, we are not consistent with our performance. And we certainly, 62%. We all have children. If your child came home with a report card of 62%, would you be satisfied with that?
Thanks, Charles. That's yeah. And I think the point that you are making there is that the whole function, the whole HR function, it's one function. Everybody should perform and rise up to that 80% that we discussed. Next question from Mozambique. Here's the question. Hello, it's coming from Mozambique. I'm glad to be here. My question is how to deal with change management when there's leadership resistance. The other question on measuring employee engagement, I think you answered it in your presentation, so we're not gonna spend time. Here, resistance, what do I do? Do I just push the leadership out of the way? What do I do?
Yeah, no, I'm surprised, Dr. Jerry, you allowed that question because it's way beyond the scope of my presentation. I'm not an organizational development specialist. So for me, change management and resistance to change, I refer to my namesake, John Cotter, the #1 global thought leader, change management. But of course, he spells his surname with a K and not a C. He gives us an 8-step roadmap. I think to break down resistance, you've got to look at having a similar roadmap, or ProSci, for example. ProSci are the global thought leaders when it comes to change management. ProSci have a 3-step change management model. And by design, whether you subscribe to Cotter's model or ProSci or any other thought leader, you have to commit to that model, and you're going to have traction relative to friction. Friction, the resistance to change. You're going to experience it. What are the sources? What are the sources of resistance to change? What I find in a lot of organizations, they want to implement change, but a fundamental change management tool that they neglect to use is the force field analysis of Kurt Lewin. Kurt Lewin, we know, is the godfather of change management. Long before John Cotter, he was the guru in the 40s and 50s. And Kurt Lewin said that you've got to use the force field analysis. Before you implement change, you've got to make sure that the driving forces for change are greater than the resisting forces. If the resisting forces for change are greater than the driving forces, if there's more friction than traction, then you go back to the drawing board. You say, well, no, we cannot implement this change management program. And we know, similar to project management, we know that the track record of change management success is as low as 20%. Only 20% of change management programs and projects are successful globally. The track record for success is very poor. And we know the #1 reason, based on the question, is resistance to change. Why are we resisting change? We need to pinpoint the reasons, the root cause analysis, pinpoint the reasons. I'm not an expert when it comes to change management and OD, so I just use my general knowledge to respond to that question.
You nailed it, Doc. You nailed it. I think let's go to Nigeria, to that meeting room there, and see if there are any questions, and let's spend the time there. There are lots of questions, but I think let's move on because of time. Let's move to our colleagues there. Okay, over to you. If there are any questions from your side.
Okay, good afternoon, Dr. Charles, and good afternoon, Dr. Jerry. It's been a very insightful presentation so far. And I think at the very beginning of your presentation, you mentioned something around organizations learning to stick to their core. And I noted that because we are in a very dynamic ecosystem. We've had the pandemic and so many other global shifts currently dealing with us. Recently, we saw the Afghanistan issue and so many things that just affect us. And businesses basically thrive on the value that they're able to provide to the ecosystem and to their shareholders at the end of the day. So, and then we are moving towards a digital footprint. So in the mix of all of this, how easy is it really for businesses to stick to their core rather than being dynamic, diversifying, and trying to remain as agile as possible? I just needed to shed a bit more on that. Thank you.
Yeah, thanks to our colleagues in Nigeria. I think probably the biggest professional HR community in the continent. So it's good to have you guys online. It's good to have you participating in this webinar. I think, thank you for the question. Excellent question. Yeah, I think for me, it really depends on the vision of the leader. If you look at a business leader like Richard Branson, for example, from the Virgin Group of companies, we know that he's a very visionary thinker. We know that he has a very diversified business portfolio. We know that he uses intuition more than intelligence. He employs MBAs to make those business decisions and to advise him and to do the feasibility studies. And a lot of the times they go to Branson and they say, Richard, don't invest in this company, don't diversify, don't expand, don't go into that market. We're going to burn our fingers. And Branson responds by saying, you know what? I just have a good feeling about this product, about this company, about this market, whatever. And 9 times out of 10, he's right. But he's the exception to the norm. I think to promote business continuity, to future-proof, and I think that's become, along with agile, like you mentioned, that's probably become the new buzzword, to future-proof our business model. I really think that we need to stick to our knitting, our core business. We understand our markets, we understand our clients, we understand our products. We are more invested in terms of innovation. We are developing intellectual capital, intellectual property, which is giving us a strategic competitive advantage. Why would you want to dilute the power, the value, and the impact of that? You might even have trade secrets. You might have almost like the inside lane, you might have access to materials or resources, or you might have a particular contractor that's giving you competitive advantage. Why would you want to deviate from that? So I think generally business management, the smart money says, stick to your knitting, focus on your core business, look at within that scope. Like we said, the Ladio, how do we make our structures leaner? How do we make our processes more agile? How do we make our systems more digital? How do we create more innovation, more intelligent organizational behavior and culture? And how do we optimize our resources? I would recommend that we follow that framework within our core business, and that's going to create that future proofing that we need. Diversification, well, you need to be like almost have the business brilliance of Richard Branson and equivalent to succeed, where you are deviating from what you know best. But I think HR, we said it, HR needs to become a strategic performance advisor. So I often say when we do competency profiling of the African HR professional community, I find that there are certain core, let's call them business skills, core business skills that are lacking. We tend to fixate on our EQ, our emotional intelligence, and don't get me wrong, that is an important skill. World Economic Forum, they've always tagged that as in the top 10 skills. But what I'm missing in your typical HR professional is your BQ, your business literacy, your DQ, your digital literacy, your TQ, your technological literacy, and your FQ, your financial literacy. If you want to be taken, and it ties up with the earlier question, Dr. Jerry, if you want to be taken seriously, and if you want to build your credibility as a valued business partner, you have to work on your financial literacy. If you cannot, for example, if you cannot read a financial statement, so at boardroom level, when the CFO is talking about financial metrics, and you cannot spar, you cannot go toe to toe with the CFO when it comes to financial metrics, then I'm afraid to say you are out of sync with business reality. What I would advise in terms of professional development, in terms of career development, as an HR professional, work on those other skill sets. Work on your BQ, work on your TQ, work on your DQ, and work on your FQ, because that in essence is not only going to enhance your competency profile, it's also going to build your credibility. We know the credibility formula. Credibility equals integrity plus expertise. Those are the two ingredients. Those are the two variables that we need to work on. Integrity, and I know, Dr. Jerry, you feel strongly about that. Integrity, ethics, plus expertise, but not HR expertise. We know Dave Ulrich is #1 global thought leader when it comes to strategic HRM and business partnering, and millions of organizations have adopted his HR business partnering model. Maybe not millions, but hundreds of thousands have adopted that. And he says, yes, it's a good starting point. Work on your HR technical expertise, but you've got to expand on that. You've got to work on your business acumen, for example.
Great conversation. I know there's another question. I just wanted to say, I, as an HR director, one of the things that I required my team to do, once, if it's not once a week, it may be too much, but once a month, hit the field. This HR, by sitting in the office and not really getting to the floor to find out what's going on, credibility, that builds credibility. When I recruit, so going to the field is one way to be where the troops are, to help you to to understand the business. And of course, the financials are important. Another question from our brothers and sisters in Nigeria.
Good afternoon. Thanks so much, Dr. Charles. Quite a few HR directors and CHROs have been able to transform from being HR specialists to business leaders by way of becoming managing directors and CEOs, apart from those in consulting, especially for multinational corporations and all of that. What do you think are the major blocks, the hindrances to HR professionals who understands the business, who have demonstrated business acumen over and over again? What is the reason why they are not able to transform and translate to business leaders by leading big corporates?
Okay, yeah, thanks for that excellent question. So Dr. Jerry can help me out here. From a South African perspective, I know of maybe two instances where a former HR director was promoted to become a CEO of a South African-based company. And I can actually mention their names, which I won't do, but I only know, Jerry, I only know of two examples where HR directors have been promoted into CEOs of companies. There may be more, and I'm sure there are, but I think there is that, like you've alluded to, sir, there is that perception, and maybe just to quantify that perception, and maybe I could send this to you post-webinar as well. IBM, one of the blue chip technology companies in the world today, they did a survey this year. They call it the CEO survey. And then they asked CEOs. So when you look at your C-suite, when you look at your CFO, your COO, you look at your chief technology or information officer, even your chief marketing officer, the CMO was included, and then also the chief HR officer, the chief HR director. When you look at those C-suite positions, and you have to estimate the relative value that each of those C-suite managers brings currently to your business, but also post-COVID-19, this post-COVID-19 talent management era, what is percentage-wise? What is the perceived value of each of them? And unfortunately, I'm going to break your hearts right now if you haven't already read the report. Unfortunately, the chief HR officer came out stone last at 16%. I'll repeat that, 16, 1-6. The CFO the chief financial officer was regarded as the most instrumental, as the most pivotal, close to 55%. I think it was 53 or 54%. So when you compare the perceived value of the CFO, very closely followed by the chief operating officer, I think was rated at 51 or 52%. Those were the two highest, all the way down to the chief HR officer, who was only, by CEOs, was only rated, this was a global study across different industries, only at 16%. So I think in responding to your question, that is the perceived value. So when we look at promoting and appointing a CEO, and we look at somebody's professional profile, so you were a former HR director, all right? You're not going to get that job. If there's somebody who's a chartered accountant, for example, who has been a CFO, or somebody who's got an MBA, who's maybe been a chief operating officer for a number of years, they are in the fast lane right now. So if you're an HR director and you end up in a job interview and you competing with a CFO and a chief operating officer, I don't think you stand much of a chance just because of the perceived value. And I think the reasons for that are quite simple. It's got to do with value. It's got to do with performance. It's got to do with, like Jerry said, it's got to do with your credibility. It's got to do with like I said in my quote, it's got to do with your understanding of the business and the operating model. Do you understand the mechanics of the business? Do you understand the dynamics of the business? Do you understand the analytics of the business? Can you read a financial statement? I think those are some of the major drawbacks which are holding the HR profession back. because we're grappling with our own issues within the HR professional community, and we're struggling, let's call it a glass ceiling. We're struggling to break through that glass ceiling to get to that boardroom level where we can then be promoted into a CEO. Jerry, I don't know if you want to respond from your experience. I think you can add a lot of value. You work with HR directors and business executives on a daily basis. I find that very limited people with a strong HR background get promoted into CEO positions. And I try to give an explanation for that.
Yeah, unfortunately, what you are saying is true, and what my brother in Nigeria, his observation is true. But the other thing that I think is important for us, if you want to do that, is the development. What kind of development have you allowed yourself to do? I worked for a company where, you know, you were not expected, particularly from senior management upwards, not to be in a position for more than 5 years. So you needed to move. Now you move laterally, you move down, you move into different parts of the business. That I've seen helping people to actually be ready. Should that, one of the lady who was HR director in this organization that I replaced at the time, she actually went on so she was expatriated to run a business unit. She actually ran a business, came back to run a coal business here in South Africa, Charles, and then was again taken back. But there must be the willingness to move across the operations of the company, because to get there and to be a manager of managers and senior managers, executive managers, there are certain skills that you need to have picked along the way. But it's a great question. Now, this question, Charles, I've got to ask it because we're talking about, before I go back to Nigeria, someone asked the question, you're talking about performance management, and can you make sure that the performance management system works for remote work, working from home?
Yeah, look, I think it's a very good question. So I've worked with a few organizations the last 3 or 6 months, you know, and I got a very similar question. So for me, it's very clear, Dr. Jerry, we have to shift the performance management equation. We have to shift the model. We have to adapt the performance management system, because you cannot reasonably expect to have a system, a performance management system that was designed for a specific purpose, in a specific context, in a specific reality, where people would be office bound, they would not be working remotely. And now I find that very few organizations have shifted their performance management approach, their methodology, the toolkit, the system that they're using. It has to shift. And in a lot of companies that I've worked with, the performance management, let's call it the architecture. When I say architecture, I'm talking about everything, the lock, stock, and barrel. It hasn't shifted. They're still using the same system. That managers are using the same approach, the same methodology. The only thing that's changed now is we have remote performance appraisal or performance review discussions. So that's the only thing that's really changed. So for me, I think companies have to go back to the drawing board, and they need to have, in terms of, we know, even before you get to strategy, we know it starts with culture, and then from culture, governance. You got to go back to governance. You got to say, well, let's have a remote performance management policy. Let's craft a new policy, because the current policy is redundant. It's irrelevant. And remember what they say in the classics, if it's redundant, if you're not current, you're redundant. So we've got to go back to governance. We've got to say, well, we've got to have a remote performance management policy. From the policy, we know flows your remote performance management procedure. Your procedure, which gives you a user guide, it gives you a manual, it gives you a toolkit. As a line manager, you know, I'm expected to manage performance remotely. How do I do this? I haven't been trained to do this. I don't know how to do this. We've never had to do this before. COVID-19 is unprecedented in terms of how it's radically disrupted the employment, the performance, and the the work landscape. Like our colleagues said in Nigeria, the ecosystem has been radically disrupted. Now, given that, you've got to say, well, now we need a new policy. Now we need a new procedure. We need a new system. We need a new toolkit. We need to empower. We need to train our managers, the line managers or the talented performance managers. We now need to train them. We need to educate them, create awareness. You can't do it the way that you did that. It's no longer relevant. You have to do it differently. So for me, Dr. Jerry, in responding to the question, I think for me, it goes back to influencing your culture again and understanding that remote management, we see in all the future of the workplace studies, they're talking about this hybrid workforce where the pendulum is going to swing back to hybrid, where certain people will continue to work remotely. Some people will return to the office. It's already happened. Some people will continue, if their work require travel, they'll continue to do that. So we're going to have a hybrid working model. That for me is the future of performance management. It's the future of the employment landscape, a hybrid work model. Given that context, given that reality, the current performance management methodology, the architecture, the system, does it address the unique challenges of this hybrid working model? My answer categorically, no, it definitely doesn't. Therefore, we have to go back to the drawing board and change. We cannot use this outdated system and now try to use it as a remote performance management tool. It's going to be ineffective and it's doomed to fail.
Thank you, Doc. Let me take 2 more questions from Nigeria and then I hand back to Yolanda. 2 more, okay, if there are any.
Thank you very much, Jerry. Thank you, Charles. Very insightful presentation with lots of hindsight and foresight, like you mentioned. My question, towards the tail end of your presentation, you talked about employee engagement. I saw a lot of the metrics for employee engagement towards the tail end, but I would just like to, same line of thought Dr. Jerry just highlighted. We are in the not so new normal of work. How do these metrics, the ones you mentioned, fit into the new landscape, the new paradigm of work we find ourselves in at the moment? Thank you.
Yeah, no, thanks. Excellent question. So what I suggest is that the time span of your HR scorecard, which includes all of these metrics that we've mentioned, is 12 months. It's a 12-month scorecard. It's an annual scorecard. And then at the end of the review period, you need to compile your human capital report, and you want to report on your performance in the respective key performance areas and the key performance indicators and the metrics. But at the start of the new review cycle, we need to go back to the drawing board and say, well, look, this is what our scorecard looked like in 2020. We now have a new working model, a hybrid working model. Are those key performance areas, are those key performance indicators still relevant? Because we all agree, and your colleague said it best, we need to be agile. We need to be agile. We need to adapt. We need to be flexible. So, well, this scorecard was relevant to 2020, but the employment landscape and the ecosystem has changed. Therefore, the scorecard, the HR scorecard for 2021 could look totally different. The worst thing that you can do is to think, well, we can copy and paste the HR scorecard from one financial year. We can just copy and paste it and we can just update the metrics. No, it doesn't work like that. You got to wipe the slate clean. It's almost like we said, re-engineering. It's reinventing. You got to wipe the slate clean, like you would do with financial planning, zero-based budgeting. You would say, no, forget about the expenditure and the revenue from last year. It's a different time. Zero-based HR scorecarding, where you say, well, let's go back to the drawing board. So human capital return on investment, which was our strategic impact workforce productivity metric, is that still relevant in this new financial year? And if the answer is no, then I suggest, and what I can also then do via the iCube Farm and the African HR Forum is I can send you, it's a very comprehensive document. It gives you all the HR scorecard metrics. You are spoiled for choice. You go back to that document, you say, well, let's look at the alternative metrics. Given the context, given the landscape, if this metric is no longer relevant, what can we replace it with? So that's what I would suggest, that you constantly review your scorecard, the relevance of the metrics. And I agree with you. It has to change. Your scorecard, your HR scorecard from 2019, and this is the first thing that I would do. If I do an HR audit in your company, I'll say, can I have, my philosophy, evidence-based human resource management. I'll say to you, sir, can I get a copy of your 2019 HR scorecard? And I'll reconcile and compare it to your 2020 scorecard, and I'll reconcile and compare it to your scorecard from 2021. And I tell you what, if I see a strong resemblance in your three financial years and your scorecard looks similar, I'm going to say to you, sir, you are not agile, you're not doing justice to continually, what do we say, HiPO, continuous improvement processes. You're not committed to that. You're not committed to agility. You're not committed to staying ahead of the change curve. I agree with you, sir. You have to be agile. You have to adjust and adapt your metrics so that they reflect the business reality.
I'm chuckling.
The business reality has changed.
Yeah, I'm chuckling because if there is an HR scorecard, many HR departments have no scorecards.
Oh, Dr. Jerry, you're breaking my heart.
All right, let's get the last question. Let's get the last question, please, from Nigeria. Any more questions? We're done.
Yeah, good afternoon. Yeah, thank you so much, Dr. Charles and Dr. Jerry. And I just have a little concern about your categorization of the work operations in Africa. When you mentioned that in Africa we are transactional, and I'm wondering how you came about this result. Was it through a survey? If it's through the survey, and I'm wondering if in Nigeria we have a very large HR community, and apart from having one of the, if not the largest HR community in Africa, we also have a lot of professionals that CIPM have produced and have actually transformed from in HR and directors to CEOs. And apart from that, we also have many of our members that are also high performers. So I'm wondering if in the survey Nigeria was actually considered, and what percentage could have been considered in that survey to actually give that result of transactional. Thank you.
Great question.
All right.
Thank you.
Yeah.
Charles?
Thanks for that. Yeah, I think it's a very valid observation. So I was able to get 3,319 respondents from Southern, East, and also West Africa. When I say West Africa, it would be predominantly Ghana. There was a very small respondent pool from Nigeria. And that was just based on, my various business dealings and various, business connections. If I had to estimate, I'll just have to go back to the research report, but if I had to estimate the degree of representativity of the Nigerian HR community in my study, I would say it's 1%. So I think what in terms of how in the Nigerian HR community things are different, I think it might be a valid assessment, because I think maybe Ghana was maybe 5%, Nigeria 1%, and then Eastern and Southern Africa would be the more prominent respondents in that particular survey. So I think, for me, I found that, and I'm probably going to be hated for saying this, from my experience, the two most sophisticated HR professional communities in Africa is the Nigerian and the Kenyan. Those for me would be the two. If I had to say best performing, if I can use that term, best performing HR professional communities across Africa. From my experience, I'm not saying it's 100% true. I would say those would be 1 and 2. The gold and silver medal for me would be Nigeria and Kenya. For me, those are the best performing HR professional communities in Africa.
Thanks, Charles. And one thing, I mean, one thing that, Charles, I think you handled because when you refer to Africa, there are some South African, particularly South African whites, who seem to think that South Africa is outside Africa. And we always have to remind, you're no longer in that school of thought. You moved away years ago out of that. And I think that has to be commended. Because when you're saying Africa, you are referring including South Africa as a country, which I think we always make this mistake. I see people making that mistake. It's like,
yeah, you're right. So I would
it's like people in America thinking, oh, you're from South Africa. Have you seen my friend in Lagos? And you say, hey, come on, these are 2 big countries. This is a continent we're talking about here. But thank you. That was the last question from our brothers and sisters.
Richard's saying Ghana's also doing well. Yeah, okay. So I need to make it. So I'll give Ghana the bronze medal. So Nigeria 1, Kenya 2, silver medal. Ghana, yes. Ghana's 3rd, bronze medal. Those are my top 3. There, I said it.
All right. Listen, Yolanda, you are on to close. I'm sorry, I was a bad program director. We were, way over time, but I think it was worth it. So back to you, Yolanda. Thank you so much.
Okay, no problem. Thank you all so much for joining us today. Dr. Cotter, Dr. Goulet, as always, thank you so much for sharing your time and most importantly, your knowledge and your experiences with all of us. I would also like to make a special thanks to the Equatorial Guinea Ministry of Labor, the Ministry of Public Administration, who are the ones who are basically working with us to coordinate all of these special sessions. We also want to thank our partner, the Africa HR Confederation, as well as CIPM, who are a special guest today. The president and chairman of CIPM, Mr. Mojid, thank you so much for helping us organize this session today. Also, the CIPM leadership, the registrar and CEO of CIPM, Ms. Salof, and the entire CIPM community. I also would like to thank our special guests today that were online. We had over 125 participants, so this is very commendable. And really what the purpose of these sessions is to keep all of us encouraged. We are the professionals who can make change on the continent of Africa. And so by us sharing our knowledge during these insight sessions, we keep each other encouraged, we give each other additional knowledge, and we help to support each other in our efforts in making Africa a leading continent for the future. We need the support of each of you in helping to make Africa a top nation, a top continent, and also so that we can begin to give value to our most valuable resource, which is our human capital. So thank all of you all for your participation today. And thank you again, Dr. Cotter and Dr. Goulet, for your time, knowledge, and experience. Please join us for our next session, which will be the 3rd Friday of September, which will be September the 17th. Thank you all for your participation.
Thank you. Bye-bye, ladies and gentlemen.
Yeah, thanks, Dr. Jerry. Who do I send the slideshow presentation to? Do I send it to Kelly for distribution to the webinar participants?
Yes, please.
Okay, I'll do that later on this evening, sometime on the weekend. I see I tried to paste the presentation into the chat box, but it didn't work. Thanks, Jerry. Thanks. I didn't realize the Q&A, that's where the questions were. I was looking in the chat box and where's Jerry getting all these questions from?
No, but great questions. We will try to answer the questions maybe in writing. If I can get them from Kelly, we can work on them. But these are great questions, great participants, wonderful day. Thank you so much, everybody.
Yeah, thanks, group. Thanks for the invitation. Thanks for the opportunity, the platform and all the arrangements. Have a good weekend. If you're traveling, please travel safely, and hopefully we'll catch up in the not too distant future.
Thanks, Charles. Bye.
Thank you, Jerry. Thanks, Yolanda.